Hello, 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 hello. Mic test, mic test, mic test. Hello, 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 hello. Hello, guys. Welcome to the 153rd edition of Trading Opportunities webinar. Let me just get some technicalities checked before we actually begin with the webinar. And sorry about the delay, guys. Just let me know if audio is working fine. Visuals I can check also at my end are looking all right. Good evening, guys. Marco, Dylan, Rajiv. Well, thank you for the confirmation. Let's get started in that case. So first of all, very quick introduction. My name is Nirav. I'm the admin and owner of 50years.com website, YouTube channel. And in this 153rd edition of Trading Opportunities in the webinar, we are going to discuss markets. This is our weekly series. We conduct 3 public webinars every Friday, generally at timing of 10 p.m. GMT or 10 p.m. IST or 4:30 GMT. So whichever time zone you are in, you can just convert it accordingly. As for the series of webinars we have so far in our 151 webinars conducted so far, got a total of 382 trading opportunities live in front of you guys. What happened with our discussion from the last 152nd webinar we will discuss today, right? As for the sequence of these webinars, we generally go over these markets: EURUSD, crude oil, gold, S&P, and BTC. Whenever I discuss the chart completely, I'll ask you guys if you have any doubts or questions. And even before discussing the chart, we'll also check what was being said in the last webinar. For a track record of our past work, that is the past webinars, live webinars, as well as YouTube uploads, etc. Since 2016, we have been keeping a track record, and you can check all the accuracy. It's all compiled and backtestable, or not backtestable. What I would say is it is compiled, and you can check it yourselves or backtest it or whatever is the proper word, right? And we have had an accuracy of this much over the years. Anyways, that's it for our past stuff and all. And in case you are interested in getting these updates on a regular basis within the weekdays, you can request details for the Slack private group by visiting our contact us page and filling up the inquiry form over here and selecting the subject matter as requesting details for Slack private group. Right. And those of you who are new and interested in learning the actual method I use, you can check out the actual video course here. And those who are having some knowledge, beginners, they are not beginners, but considered as some intermediate traders, they can check out the book. It's available on Amazon's Kindle electronic delivery platform. Here's the link, or you can just type this in the Amazon Kindle search. That being said, let's now head over, and this is the 152nd webinar. What I'll do is I'll check what was being said in this webinar, and then we'll proceed with our current one. I can see sound, etc. As confirmed by Manuel is working, so I'll just check one more time. Well, it's working at my end as well. So in this case, we'll consider everything is working nice and well, and let's proceed with our webinar. So first of all, let's see what happened in our last discussion of Euro USD, which was conducted on 7th of February, 7th of this month, basically. So here is a discussion from our last webinar. Let's see what was being said. So quite clearly, we were just interested in an upside movement here. Let me just play the video and zooming in. Let's see what was specifically being said. We were looking for a WXY correction, which can then take off. This was the support region, this wide support region. It was tested quite nicely, more or less, The market almost went till the lower part of it. So the idea was we will look for upside trades, and we even had an alert placed here. So if the market was going above 1.038, I think that was a setup we will look for longs. And the actual conservative setup was above 1.044. We will actually consider even bigger long opportunities. That was a trade setup or the discussion from our last webinar. Let's now head over and check the actual chart of euro and see what has happened so far. Let me just remove all the drawings. So this is the chart of euro. Zooming in a little bit. Last webinar was, as I just mentioned, on 7th Feb. The market was somewhere here when we discussed it last time. Let's just see what has happened since then. So since then, as we can see, the market has so far gone ahead and given a gap down movement below what our low was at that point of time in discussion. And after giving that low, the market has more or less taken off. So it is not non-ideal. It is sort of the way we expected this market to behave. One second. So as I was saying, this is more or less expected kind of behavior. We were expecting the market to take off from the support region, whatever that was. It kind of went a little bit below it, and then it has gone above and taken out the high, which was also our conservative long setup. So it triggered the long setup and it has gone up as well. Even if you are holding longs right now, it will be in profit. But the thing to discuss here is the choppy nature. Although, I mean, from an analytical perspective, we will call this a +1 analysis. That is analysis which in shorter description will be went up as per analysis. Right. So in this case, this market did go up, and as per analysis, it triggered our conservative setup as well as aggressive setup and has sustained above it. And we now want to see what is happening with this last leg, this leg, because it does not look very clean. And for that reason, we would like to zoom into it a little bit. There are multiple instances or not multiple hypotheses here we can use to count this. I particularly am thinking of this as a possible structure, diagonal structure, basically from here, right? So if it really is a diagonal, then once it's complete, we will then look for a corrective structure like this. So here in this case, we are looking for a 1 and a 2 and a 3. Keep in mind the important thing about a diagonal structure is the overlap between the fourth and the first. So here it is the first, and here it is the overlap between the fourth and the first. And the trend lines are also seemingly going to connect in the future point. So it's probably a contracting diagonal. Anyways, that is the current outlook here. So we don't have to be very strict about the setup, only real time when we will be looking for trades or what you call conservative trades from the setup is once this market takes out this trend line, the 2-4 trend line, and then we can then wait for the very classical setup that I had discussed many times in these webinars. The market retesting the trend line which it just broke and then giving us a sell setup. And even in this sell setup, you can either take the short entry here, which will be what we'll call aggressive, and the conservative setup will be taking the short entry here at the break of this level. So basically here. So this will be the kind of idealized scenario, but to keep in mind, markets are not very what do you call conducive to our idea of ideal scenarios. They may not do anything as we expect them to do. But even so, we would like to have these quite neat little ideas of how we would play them if we are lucky enough to find these setups. So more or less, we look for short-term sell setups and conservative idea we have just discussed. And do keep in mind the risk with this kind of idea is that the minimum downside may be very low, like that was the minimum target here. And when the market does trigger our conservative setup over here, the target and the entry are very not very far apart. So that's an issue, but that's an issue with any trade for that matter. Some not for the matter with any trade, but most trades. That's about it for euro. I think we have discussed the whole sell setup idea, and in case we are wrong, then the market will not do any of it. It will just continue going up. Then we'll have to reanalyze the situation, and I already have it reanalyzed, but I think this is the most likely scenario or major or high probability scenario. So we're just going to keep our analysis in alignment with that. And with that being said, I'll just wait for a few moments in case you guys have any doubts or questions. You can just post them in the live chat while I have a look at our comment section so far and see what is being said in the live chat. So, hello Raji, one of our very old members of YouTube and one of my first few students from our training program LT Batch. It's nice to see you here. And hello Marco and Ativat, members of our private Slack group. And Raghu, again, member of our private Slack group. Thank you for the confirmation there, Manuel Costa, one of our regular viewers. And good morning to you, Luis. So I guess there are no doubts here. So in that case, we can now head over to our next section called, not called, the discussion for crude oil. So here we are on the recording from our last webinar, and let's check what was being said about the chart of crude oil from our discussion in the last webinar, which was conducted on 7th of this month, right? So in the last webinar, let's just move a little bit forward or more forward. Yes. So in the last webinar, we had the idea that this market is probably progressing downside to the downside as a diagonal structure. So as a diagonal structure means we were you can see this contracting trend lines just like we discussed in the case of our last chart on euro. They were in the upward direction on euro, and here they are on the downward direction. So once this structure is complete, we at least see a 3 lakh progression, and then the market can decide either it wants to go up or it wants to continue the trend to the downside. So let me just open up the complete chart. So you're expecting that if the one is complete here, the market will go up a little and then fall down. If not, then the market can just continue up. That is, this whole structure was a end of the trend or end of the corrective structure. Now that's enough for our flashback. And now let's head over and check the live chart, which is here on screen now in front of you. So as you can see here, what is the date was 8th February. So this is the date, 8th February. We discussed the market. Sorry, 7th February, right? 7th February. So we discussed the market. The price was somewhere here, and as you guys saw right on screen, we were expecting the market to give us a diagonal structure. The market has finished the diagonal structure. It did go up as literally as discussed in our last webinar. And as you saw in the second outlook in our last webinar, I was pointing out that this was probably the one and probably we will have a two. So it followed our hypothesis of secondary hypothesis that this structure is continuing to the downside and the first leg down is the diagonal and not the end of the whole move. So basically we are looking at something like this. First leg is complete, and this was complete as a diagonal structure. This is the second leg, and we have at least two legs remaining from here, which means the market will go and give us 3, 4, and 5. That's one way of looking at it. There are some other outlooks, but we aren't really concerned. But because in this case, if we have two legs to the downside remaining, then we will at least get one leg. So basically, we are at least looking out to see this leg come into play. As per our analysis, even if the whole thing is not true, at least part of it will become true because we have two legs to the downside. We expect one leg to come into play. Basis of that, I did enter short positions on crude oil. It was all posted live in the Slack private group, and all of this was also discussed, the whole count, etc., etc. We discussed it, and this was all posted with live plots and live reversal levels, etc. Here it is added shorts. Right. So since the trade is still in play, it's a wait and watch kind of market, and obviously the stop loss becomes technical high at 73.938, although I have it a little bit lower. And the idea remains that if we are correct, we can see two moves downside. If not, then at least one leg to the downside. So that's it for our quick take on crude oil. And of course, it has strong support coming in the whole of this zone. So I personally think that it will at least go and test the level around 69.56 and perhaps even go lower and touch 66.81. But I will have to trail my positions, and we are not really interested in holding too much. I mean, if I had multiple longs on, then maybe I could leave 20-30 position, 20-30% of the position to this level. And I don't have a very big position here right now. So for now, I think I'll probably consider this as the main level for considering exits. Not much to add here, I guess. And just let me know, guys, how are you? Are you able to perceive my speed? Am I going too fast, too slow? And of course, if you have any doubts or questions, just to push them in the live chat before we move over to our next chart of gold. Right. And also, one more thing I wanted to say again, guys, as announced in our last webinar, we will be conducting 3 webinars publicly, and the fourth one will go private for our private Slack group members, obviously. And moving forward, I have requested you guys to continue sharing the work and try and keep our shares and likes so much so that we at least get 1,000 views. And as I said, we have crossed 150, which is an important webinar number. Like we have conducted 150 webinars. So at this point, I'll probably observe it for the next 3-4 webinars, perhaps. And if the views are not as per our liking, that is not near 1,000, we'll consider making the third webinar of the month also private. So those of you who are enjoying the content in the public view, who are not members or of the private Slack group or of the YouTube channel, because we also have a YouTube membership active, do keep in mind that the content will become private and so on so forth. This will be the strategy. If we see the participation, that's good. If not, we will continue to make webinars private one by one. So again, as I said, I request you guys to kindly do your work and continue sharing the content. That being said, I think there is not much to say here. Yes, at what we hold with the strict stop losses, and of course, not increasing the position right now. We are waiting for the confirmation for it. So, I guess nothing to add here. In that case, let's now head over to our next chart of gold. Let's first check what was being discussed in our last public webinar on gold. So here is the chart of gold as discussed in our last public webinar, which was conducted on the 7th of this month. And let's see what was being said specifically. We were looking for a wave 4 correction, completing with followed by a leg up for the fifth, and long setup was 2880 plus was the setup. That is above 2880. We would look for upside in this market. Let's see if something else was added. Yes, we discussed the short side scenario as well, 2840 lower. And then we were discussing some live trades. So far, let's now discuss the live trades which we have for moving to our actual chart, because again this week also we were trading gold, and it was as always giving us some exceptional entries. Let's see, book profit on longs on Feb 10th as well. So yeah, here is the trade on February 10th. We added longs. The entry level is 2881, which is as per our discussion in the public webinar as well. So this is again a plus one kind of analysis, that is we discussed it and in the public webinar, and it went up as per our analysis. So this brings our tally to 134 trades in the last 152 webinars. Anyways, this is the commentary how we are telling the situation or managing the position. 2894. So we already have more than 12 13 points from our entry. Booked profits on all longs. Profits booked around 2895. So around 14 points clean profit we have booked. Right. And then here's the second entry on February 12th. We added longs. Now here's a what do you call a good one. Look at this one. We added longs around 2902 and booked profit on all longs at 2934. So basically 32 points clean profits. But more importantly, pullback expected. Look at the commentary. So we were expecting pullback in the market. After what is this price level? 2934. Let's look at the live chart now. This is an interesting thing to show you guys who are not in our group. 29, sorry, this one. Yeah, there it is. 2934. So yes, there it is. So the market did not sustain above this level of 2934. Let me zoom in to show you. It went up, gave some spikes, and then fell down. So literally right where we exited and suggested a possible pullback incoming, the market reversed from that level, and we have also marked it with this red line. So this one has performed precisely as per analysis. So now let's look at this chart and see how things are going from this for this market right now. Although I have to say it has fallen a little bit faster than expected. Hello Raghu. Made profits for spot as per your analysis from 2903 to 2934. That's good to hear. One of our private Slack group members, obviously, and here is Etivet again made 32 points profits. That's just nice to know our group members are making profits. Right. Anyways, now let's look at the live chart. So as I just mentioned, the analysis is nothing very unique. We are expecting this market to just head up from here. What is worth noting here is the way this market. 1 second. Let me just complete the thing. What is worth noting is that the way this market has fallen from here, this is not looking nice. Count and all is good, looks perfect, but this is a bit too strong of a move, and I personally feel that This is a wait and watch kind of market. 1 second. Yes. As I was saying, all the count and all is good, and we are expecting upward movement for this counter, but this is suggesting that we need to be cautious here. So even if we do enter longs, we'll enter very small longs with strict stop loss, because do keep in mind counts can change. Counts are dynamic as the market gives us more information. So we do reflect that information on charts in the form of counts, and hence if the market says something contrary to the current count, we'll have to, you know, show that in the form of new counts. So there's no magical thing about counts. They keep changing. I think I've said that so many times. So anyways, keeping that in mind, we will, if we go long at all, we'll either keep a strict stop loss and small position size. And personally, I prefer to at least stay out a little bit. We have already got two strong moves. I think one was 12 points something, another one was 32 points something, and together they are 44 roughly. So let's just say 40 points. These are 44 clean points I've just showed you. So even then, we can just say let's rough, what do you call, round it off 40 points, which is a very, very good move and big move for gold to be caught in a week. I would say even in a month, that would have been fine. After all, it is gold we are talking about, right? But my point being, when we have got so much of profits, it is not very wise to go greedy and lose all of it in the pursuit of trying to make more, right? So wait and watch kind of market. The conservative setup will be to look for longs above whatever this level is, 2929. Aggressive setup will be to look for longs right where the market currently is, with stop loss placed around 2864. I'm not keen on it. I'm not gonna enter any longs now, and probably in the next section maybe. But right now, I don't think there's enough evidence to bother ourselves with anything. So wait and watch kind of market, and this is the count. And let me just show you the whole structure. We are looking for longs, and the targets are 2989 and higher. So let's just say, oh, it's very much near 3000. So very near 3000. 2989 is like roughly 11 points away from the important resistance level of 3000. So all the more reason to stay cautious. Nothing more to discuss here, I guess. And if you guys have any doubts or questions, just push them live in the live chat. I don't see any new questions here. I'll just wait a few moments here before we head over to our next chart of S&P's 500. And guys, keep in mind that since last in the last week, I made the announcement that we will be conducting first 3 webinars of the month publicly on YouTube as always, and the fourth one will be private. So if those of you are not yet members in the Slack private group, do keep in mind that if you want to check out our latest webinar and obviously the weekly updates, latest means the fourth latest webinar, then you will have to become a member, obviously. Those of you who do not want to become a member, that's fine as well. Do kindly continue sharing the content, because as I just said, in the next 3-4 webinars, we will be monitoring the performance of these webinars, and we are looking to have a target of at least 1,000 views. And if we are not reaching that, we will consider moving more webinars privately. We do have a private community there which has been there for, I think, maybe 2 years. I don't exactly know when I started the group. We'll have to check that. But anyway, it's a quite old community now at this point, and there are some members who have been with me from since the beginning of all this stuff which I do now, YouTube and all. So much more than 2 years. So anyways, that's about it for our quick look on gold announcement and all. And there's the question here. I should take it. Is this still in 4 possible? Well, technically you can say yes, but I have my proprietary analysis which is suggesting no. So yeah, technically you can say yes, but the way I look at the markets, I have my own what do you call own rules which I have developed over the years, which strongly suggest that it is not a four continuation and the fourth is complete here. And again, I will not go into the details of that, but hopefully that answers your question at your. And there is no new question other than this, so I'll just switch to the next chart in a few moments. Just give me a few moments. You're welcome, Tibet. Now, in that case, since there are no doubts or any questions, we will now head over to our next chart of S&P's 500 and see what was being discussed in the last webinar before we head over and discuss the current market outlook of S&P. So here, as you can see in the recording from our last webinar conducted on the 7th of this month, we are, let's see what we are specifically saying on this chart. Yes, we are looking for upside movement as possible diagonal, and let me just move a little bit more forward. I guess that is the main theme. We look for some upside movement and then possible correction on this counter. Overall bias remains bullish. Let's see what the price is. 6055, and I think we have an alert here for short-term longs at 6100. That's about it for our discussion from the last webinar. Let's now head over to the actual chart, which is right here on screen live now. Here is 7th February, somewhere here. One second. Yes, somewhere here. So as you can see, none of the stuff we discussed in the last webinar seemingly has played out. We were looking for a possible diagonal structure, but instead the market has went down, remained sideways within this range, expanded the range a little bit, which is a known phenomenon, and then is doing something else. It's doing something now. Obviously, it is always doing something if it's moving. So let's see what has changed. So since our last discussion, I have now updated a few things. So first of all, from this point of reference, price level around 59.14. What do we have here is a structure for wave 1 up, and then a corrective structure for wave 2. And I'm assuming that since this one is complete here, we are assuming that the 2 is progressing as a possible flat structure. Again, it's a hypothesis at this point. So this is the A of the flat, and the B of the flat is somewhere over here. Still continuing, perhaps, maybe still has one more leg up remaining. And this is the C of the flat. So again, it could be here as well. The B could have already completed here as well. We don't exactly know, right? But whatever the case is, the main point remains that we are within this sideways range. A little bit expansion can be seen. A minor movement to the upside will not be out of the ordinary. But more or less, the market is expected to give some price action within this range. That is, what do you go, get back inside the range, perhaps within the level around 6081 or something. Test these highs maybe. And once these levels are tested, perhaps even penetrated, then after that we can expect the market to take off. So that is the main theme here on S&P 500. I have not taken any positions on it right now. And the idea remains very simple. We want to see this rough structure play out. And in this particular case, since we are assuming it as a possible flat structure, we have a little bit more simplification of the situation. The wave A will have three waves, which is basically A down, B up, C down. And then B wave will have three waves, which is A up, B down, and then 1, 2, 3, 4, 5. So perhaps one leg up is remaining here for this B. And once that is complete, we will then look for leg down for the C, which can, if we are able to spot the end, which is the general idea, which is generally what we want to see, then we'll be able to catch this up move. Right. That's it for our take on S&P's 500 here on the current time frame of 15 minutes. Right. So wait and watch scenario here. We want this idealized setup to play out. Nothing much to add here, I think. So I'll wait for a few moments here. If you guys have any doubts or questions, you can just push that in the live chat. And yes, if the count does work out, we are looking for 6200 and higher levels as our incoming targets for this market. So as always, guys, if you are enjoying the content, do not forget to hit the like button and share the content. Those of you who want to get our week-to-week outlook or day-to-day outlook for every week, and also get our fourth week's private webinar, they can catch us by heading over and becoming a member of our private Slack group. In case you have missed it earlier, the process is simple. You can request the details by heading over to our website's contact us page, selecting the subject matter on the left and sending an inquiry. That's about it, guys. I think we'll now head over to our last chart. I don't seem to have any doubts or questions here. So let's see what was being said on the chart of BTC Bitcoin in our last webinar before closing out this session. So here we are on the chart of Bitcoin, and seemingly we are in a range as per our last discussion. Let's just move it a little bit forward and see if there is something else we discussed on this chart. Not really. And there is a setup 1015,990 or 1016,000. Plus, we will look for possible short-term longs 1016,000 basically. That is the only setup I can think of. And overall, I do remember this market has kind of not given us much of anything. So let's check that. Not much of anything here. Here is the range which we have already marked in our last discussion. And here is the level 1016. What is it? 101600. Sorry. Yes. So above this level, we will look for possible long setups on this counter on BTC. This was the same analysis as was in the last webinar, and hence there isn't much to add here. The idea is very simple. We are looking for A up, B down, and C up kind of setup. So from this point of reference, we have the one second. So from this point of reference, we have the A leg up here and B leg down here, and we are expecting the C leg to continue here. So this is the 1 of the C, 2 of the C, and so on and so forth. We are expecting this market. If this count is correct, we are looking to go longs above this marked level. And it becomes a wait and watch kind of market. Nothing really going on here, or nothing what you call moving as what you call interestingly, I would say. And with that being said, we have at this point discussed all the markets we discuss in these webinars. And as just I remember, I said I'll add more, add one more market at least, and we'll probably keep cycling it, changing it. But as it so happened, I have been exceptionally busy for the last few weeks with my own trading and other projects which I am running. In my own current research, I am studying new dimensions, or what do you call not dimensions. I'm studying some new topics which are unrelated to trading, but indirectly related, because I was studying a well-renowned author, Robert Greene, and he suggests in his work that once you have mastered a particular subject or field, you need to study subjects which have minor overlaps but not significant overlap with your field, so as to explore new ideas and get ahead in your field. Right. I like that idea very much. And generally also I am always studying and exploring new concepts, so I'm busy with these things and all that. Again, as it so happens, if I do come across something new and I feel like I can share it, because it's not like everything I do I share, then the private Slack group members will be obviously the first to know. And if I release some public information, book or course, etc., I'll also release a notification in my emailing list. Again, in case you guys do not know, we do have an emailing list, and it is something you have to sign up for by visiting our website subscribe email list page and filling out the details. With that being said, we are now finished with our current session of this webinar, and I believe you guys would have found value in it. And if you did, do not forget to hit the like button and share the content. Do keep in mind that our upcoming webinars or the upcoming public webinars will depend on the level of sharing or likes, or what do you call, most importantly, views which I get from the current webinars. We are looking for at least 1,000 plus views. That's the target at least. And if we get anywhere near that, that's good. Otherwise, we'll look to make this project more and more private. Right. So thank you for staying till the end, those who did, and thank you for those of you who continue doing sharing and liking the work. That's very nice to hear, Raghu. And with that being said, I'll put an end here to this webinar, and I'll see you guys. You are very welcome, Marco. So as I was saying, I'll see you guys in the next webinar, and take care.